Welcome in this video. Xcn coin big pump is coming. What is the reason? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. If we examine the chart carefully, one of the most prominent and promising technical structures is the classic and reliable reversal pattern, the inverted shoulder-head-shoulder. This pattern is a very strong technical signal that an asset, especially one that has been under pressure for a long time, has entered a recovery process, and the current downtrend is nearing its end. Not only in theory, but also in practice. The inverse shoulder-head-shoulder pattern has provided traders with countless lucrative opportunities and has become one of the most trusted structures that clearly signals a market reversal. One of the most important features of this pattern is that it shows that the market is no longer willing to make lower lows, and that buyers are starting to enter the scene. The initial decline starts with the left shoulder, followed by the deeper low, the head pattern, and then with the right shoulder, the selling pressure gradually ends and the price starts to recover. The current price action supports this scenario, and all the components of the pattern are clearly visible. This is a strong sign that the market is on the verge of a reversal. The volume profile during the formation of the pattern is also quite meaningful. Usually, the selling volume is high during the formation of the head, but by the right shoulder, the volume decreases, meaning that the selling pressure weakens. This is another indicator that adds to the validity of the pattern and tells traders that the upside potential is strong. If volume is low, especially during the right shoulder, and then starts to increase with a move towards the neckline, this is usually a sign that a breakout is coming, and a bullish breakout is in the offing. The neckline is one of the most critical areas of this pattern. When the price reaches this level, it often meets resistance. But if a strong breakout occurs, it usually signals a sharp move to the upside. And it is at this stage that technical analysts measure the distance between the head and the neckline to calculate the target of the pattern. This distance usually gives the minimum target level that the price is expected to reach after the breakout. Therefore, when the breakout of this pattern occurs, the target is an upward movement equal to the depth of the head, which indicates significant potential. Analyzing the current chart, the formation of the inverse shoulder-head-shoulder pattern is nearing completion, and the price is approaching the neckline. A breakout at this stage could be the beginning of a major reversal, not only technically but also psychologically. Because traders know the strength of this pattern, they start taking positions at the breakout. This leads to an increase in volume, and the bullish movement accelerates further. Such strong patterns not only bring about short-term price increases, but also long-term trend reversals. Seeing such reversal patterns, especially in bear market conditions, gives many traders renewed hope. This is because the levels at which the pattern forms are often considered to be the lows, and the uptrends that start from these levels can be the start of new trends. In this context, the current inverse shoulder-head-shoulder pattern is also a strong signal that the market is starting to rebound after prolonged declines. Moreover, the healthy formation of this pattern may reward traders' patience. Because success in technical analysis depends not only on spotting the right patterns, but also on patiently waiting for them to complete. The structure that is currently forming opens the door to a strong technical structure that can bring traders a valuable profit at the end of this patience. When all these elements are put together, the current technical structure on the chart gives us an important message. The price, which has been under pressure for a long time, may now be preparing to turn its direction upwards. But we cannot decide the analysis with the pattern alone. Let's look at the other metrics. Keep watching. A careful examination of the chart shows that the price has entered a significant recovery from the bottom. The Fibonacci retracement tool applied in this process offers us a very meaningful and technically strong return zone. Fibonacci levels, especially from the bottom to the top, help us to make sense of the price's movements, while creating an important reference point for investors' trading decisions. In this context, it is clear that the 0,786 level plays a decisive role in the current chart. The price has entered a correction after the previous bullish wave and has retraced to the Fibonacci 0,786 level, one of the most common ratios in technical analysis. This level is also very meaningful in terms of classic investor psychology, because 0,786 is considered a strong support area where the correction deepens, but the trend is still intact. Most of the time, market participants see this level as the last stop. That is, the price is expected to change direction from here. At the moment, we are seeing just such a scenario unfolding. The price action on the chart shows that once it reached the 0,786 level, the downside pressure subsided and buyers took the stage. The strong reaction from this area seems to have created not only a technical correction, but also a second bottom formation. In technical analysis, such structures are very valuable because they are the first signals of a double bottom pattern. If the price has found support at a point similar to its previous low and is gaining momentum upwards from there, this indicates that traders now accept this level as fair value. This turning point gives traders strong confidence. Because the operation of the Fibonacci 0.786 level is an example of behavior in line with the principles of technical analysis. At the same time, rebounds from these levels both create short-term buying opportunities and lay the foundation for healthier rises in the medium and long term. In particular, the increase in volume data in this region is a very important signal that confidence in the market has recovered. This is exactly what is currently being observed. Moreover, the fact that the price made a second bottom and bounced up from the same level shows that this area has now become a strong support zone. Such support zones can continue to work in the event that the price approaches this level again in the future. This creates a reliable ground for investors. At the same time, if the price bounces off this level, it may reinforce the perception that the decline is over in the market and prepare the ground for an upward rally. In technical analysis, returns from the 0.786 level are usually hard, because the price that goes down to this region often raises the question, is this the bottom among investors? If the answer to this question is positive, and buying starts at this point, the uptrend can proceed with determination. This both confirms the trend reversal and allows the price to move upwards again. At the same time, a second bottom is psychologically comforting for investors. Because while a single bottom can be seen as a temporary rebound, the perception of a double bottom is considered as the first signal of a long-term uptrend. To summarize, the strong upward trend of the price from 0.786 in the measurement made with the Fibonacci tool is a very valuable signal in terms of technical analysis. This move indicates both that a strong support zone has been tested and that the price has gained confidence by making a second bottom. All these structures indicate that the technical upside potential is high. If this structure is maintained and the price continues its upward movement, it could be a very productive period for investors. Therefore, the market offers significant opportunities for investors who recognize such patterns and patiently wait for confirmations. When we take a closer look at the technical view on the chart, we observe that there is a remarkable structure in the RSI indicator. This structure on the RSI chart clearly shows us how the momentum underlying price movements is developing. In particular, a long-standing downward trend line on the RSI, the downtrend line, comes to the fore at this point. However, this is not pessimism, but rather an exciting window of opportunity in terms of the possibility of a turnaround. The falling trend line that forms on the RSI is one of the main technical obstacles that, over time, suppresses prices' upside attacks and causes momentum to move downwards. It serves as a strong line of resistance that the RSI has touched many times before and turned downwards. However, the chart shows that the RSI is approaching this trend line and putting significant pressure on it. The most positive aspect of this situation is that every time the RSI touches this trend line, it is no longer making lower lows, but more stable or slightly rising lows. This is a preliminary signal that the momentum suppressing force is now diminishing. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.